I want to start my presentation with two questions, basically. And be soft on me. I never gave this presentation before. It's the first time, so it's a premiere for me. So, what if in the future we don't need a bank? It's question one. Question two, and we have heard a lot about payments and remittance, etc. What if the big topic is not bank the unbanked, but unbank the banked? Did you think about that? Some of you guys probably know this, but for me it's mind-boggling, and I always need to remind myself of that, right? That's the Genesis block of Bitcoin in hex format. So you see on the right side, Chancellor on brink to ask for a second bailout. That's 3rd January 2009, headlines of the Times. That was printed into the Bitcoin Genesis block. That's mind-boggling to me. So what does it mean? It's a clear, and there's a lot of bankers here in the room, it's a clear attempt to disrupt banking, including the monopoly on the money supply, or the production of the control of the money supply. This is, for me, really what blockchain and Bitcoin means, and cryptocurrencies. And the banking community thinks blockchain is good, crypto is bad. I'm not so sure if you can divide these two or have one without the other. So we all know what happened 2008, right? So the financial system nearly collapsed. And when I was introduced, Salus Alpha Capital, I come from the hedge fund space. So this is what I live with, basically, right? It's my day job, actually. The balance sheet of the Feds and all the other central banks exploded. And this is irreversible. There's no way out. And if you want to look at that from a macro perspective, then you will find out that maybe this is an 80-year cycle. And maybe we're heading for a new financial system. And maybe the blockchain plays a core role. Maybe even Bitcoin plays a core role. So 12.3 trillion money was printed. So that's why it's irreversible, right? There's a lot of... I stopped reading the press, by the way, because QE and is interest rates going up or not? The Fed has the only chance to let these bonds mature, and it will take at least another 15 years till we normalize. So it's irreversible. Obviously, the financial sector is reinventing itself with the use of blockchain. And obviously, blockchain is actually a good instrument to make the most inefficient industry on earth, which is banking, more efficient. So we actually should see it as a positive, right? And we talk a lot today about payments, remittance, cryptos, settlement. From my perspective, only with a stable coin there can be mass adoption. So we're trying to solve that problem with FX token. There is, from my perspective, as a financial practitioner with over 30 years experience in the space, 16 years in hedge funds, there is no way that a merchant feels happy with Bitcoins in regards to the volatility, unless he's a speculator. We are launching FX token, stable coins, and I will later explain what a stable coin is. But for me, a stable coin is something that is backed by real assets. The biggest stable coin is Tether in the space, and it's backed by US dollars deposited at banks. And we're doing that in all currencies, basically, right? So dollars, euros, yen, etc. And obviously, they should have, and they will have, a price of 1. And I'll let you know how we do that in a second. So the opportunity is massive, right? You have, you know the market because you are in the market, basically, right? I think the obvious use case for a stablecoin is obviously with the exchanges, right? The cryptocurrency users, because the gateway to fiat is some kind of closed, so they stay in crypto, first of all, or basically they need it for risk-off scenarios. Actually, just a side note, we have a crypto fund basically trading the top 20 actively, and we use stablecoins to risk off. This is actually why we are doing this project, because we need a risk-off instrument. And a stablecoin that works obviously makes sense, because you don't need to go to fiat through the legacy banking system with the 2-day settlement period and the fees attached, etc., etc. Remittance, 600 billion. Global payments, 1 trillion. So that's huge, right? Who knows where stablecoins will be basically used for in the space. I see huge applications to use it for payments, remittances. It makes it simple also for third world countries. Imagine just a lot of countries don't even have stable currencies at all. So the problem I described basically, right? If you really want to stay, and there is a crypto economy out there now that's some kind of developed parallel to the financial system, right? And people get paid in crypto, right? Well, that's good if the price just goes up, but it's not so good if the price goes down. So loans, salaries, payments, they're all poorly served with volatile currencies. So obviously, stablecoin, there's a real need for that. So the solution we have is basically we pack $1 to $1 government bond, €1 government bond, €1 government bond. So basically every token issued, every stable coin issued is backed by a bond, a government bond. Let it be a AAA asset, right? So through this solution, basically, and the legal structure around, and by the way, we have all the licenses in place, the framework we use is basically no counterparty risk. Whereas when you have another stable token with a bank deposit, it's the bank credit risk. So if the bank goes bankrupt, the money is gone. What the space, basically some blockchain, I would say, philosophy that I had struggled with, right? I mean, what does decentralization actually mean? And I looked into the space 2 years ago, and I couldn't get my head around, I couldn't get it, to be honest, because I thought, okay, the problem is trust. Why are we not trusting anymore? Me being in the financial system, right? I still trust it, right? But the space doesn't trust anymore, and obviously decentralization means more, because decentralization means it means to take away the central balance sheet, right? Or the balance sheet of a central institution. And if you take away the balance sheet of a central institution, what happens? And let it be a bank, the bank is gone, right? No balance sheet, no bank. Obviously, and this is what decentralization means. So, on the other side, decentralization should replace trust, right? And because it's printed on the blockchain, therefore, we trust, right? In numbers, we trust. If you have a ledger, it says that. If you have a ledger nano, it says that on the imprint. So it really means that giving trust to the space, because I told you now we back it by bonds and we are fully regulated, maybe that's not good enough, right? So we do a proof of assets protocol where basically the community votes then on the level of the pack. And one problem of stablecoins is basically not just distrust, but also the trust on the price, right? So in reality, how can it have a price of 1? I would say it's very easy, right? Because if someone wants a dump, we buy it back and sell the bonds. If someone wants to pump it, we sell more, take the proceeds, buy the bonds. So it's actually very easy for us to hold the pack. There's no way it can break. Legal and regulatory setup is fully done because we use our legacy infrastructure obviously because we are fully licensed, fully regulated. And as I said before, I think the core point, and that's quite tricky to deliver, but it is like it is. There's basically no default risk per law and no custody risk, basically, because the structure is fully regulated. So who are the competitors? And this brings me basically to a classification of stable coins. And on the left side, you have the most prominent one, which is Tether, which is backed by bank deposits in dollars. Big drawdown. If the bank goes bankrupt, so does Tether, basically. The Tether goes worthless. Make a DAO and Basis, they're all experiments, right? There's a lot of experiments in the decentralized space. I'm not sure if I believe yet if everything can be decentralized, because actually I would say I don't believe that. Because if you talk of tokenization of real estate, etc., you always end up at a custody risk. You just transferred it, right? So a real asset tokenized means also always custody risk. So, and obviously, we just shifted the trust to someone else, basically, right? So, cannot happen, or it's not working that way. So this is why these guys actually stay in a decentralized manner. But they are experiments, right? They are algos. So what's the problem with an algo? Well, I think 2008 was a problem with an algo, right? Too much leverage in that algo. So it will break, right? That works like garbage in, garbage out. So there's no way that these experiments will be successful going forward. It's just a matter of time when they break, right? And these algos like Basis, they try to, for example, they try to mimic bonds and equity and have the algo around it with supply and demand and so on and so forth, and mimic a central bank, right? The decentralized central bank. In the middle one, the Make a DAO, there's stablecoin is now a big word, but they're not even stable, right? Stable for me is a price of 1, not the price between, I don't know, 0.80 and 120. That's not stable, right? Back to gold is not stable because you have the volatility of gold, right? Gold volatility is risky, right? You could still, I don't know, be down 50%. So yeah, it's back to gold, but it's not stable. So I think our solution is basically solving all these kind of problems in a smart way. Well, with the project, we did deploy all the stablecoins to the Ethereum network. So it's ERC20, right, in all currencies. You can go open source, right? That's the beauty of Ethereum network. You can go and look the code up. So basically, how does it work? At the end of the day, it's FX token bridged to fiat. So once you basically come to us, you buy the token from us. That means you send us the fiat, or whoever is the participant and is able to send us the fiat. We issue the token. We buy the bonds. The token is in circulation, has its value. And once people redeem, they again come to us, sell the token at the price to us, price of 1 for the dollar. We sell the bonds and basically give you back the fiat, right? So this is how the money flow works, and it works in all currencies. And we also did actually here because a lot of people don't have actually fiat, maybe they have just crypto. So we actually allow also for the first transaction to send us crypto, basically, which we then convert to fiat and buy the bonds, right? So all these contracts have been deployed, and there is one more token, which is basically the investor token, FXTO, which basically is the operator token. And in the new world of token economics, the utility of this token is basically on the left side. It's the proof of asset voting. It's you get a rebate, and it is being bought back and burned, basically. So till actually 100% of the FXTO are burned. So there's always decreasing supply, basically. Decreasing supply, and therefore, hopefully, a price appreciation. Everything is ERC20, and we're currently in the private sale. And this is something to that slide. Let me talk, we did talk about this one here, like I said, 100% of the tokens are burned. I like actually the concept because what happened to Bitcoin when we first started, right, is this deflation, right? So the whole space lives on deflation. And this is good, deflation is good for investors, isn't it? So timeline, we're currently, like I said, the stablecoins have been deployed. We're doing an API that is supposed to be finished in November to basically connect the exchanges, to send us fiat, right, or crypto or whatever, or other consumers, merchants, banks, who knows who will use that. So basically you communicate with us via API. The whole world is about APIs nowadays, as we've learned in the BSD2. And we will be fully operational 4 weeks after the end of the main sale. Basically, everything is done. We're just doing this timeline to basically secure the funds and then basically run the project to completion. But there's not much we need to do besides the API because all the other stuff is already in our possession, if you want. So, doing a stable token, and that's, I think, the core message here, is not a technical problem, right? The space believes it's a technical problem, right? Like we saw MakerDAO and Basis. It's a legal problem, right? So it's not a technical problem. Some tech come in, obviously, if you use the blockchain, and that's difficult. We did program all in-house, so that's quite interesting. We are quant hedge fund, so obviously we have some IT infrastructure, and therefore we were able to do everything in-house, and that's how we operate. Licenses in place, as said before, proof of asset protocol, robust proof of asset protocol, no custody risk, no default risk, proven team. And you see the card on the side, obviously stable tokens will be used also on cards, and we probably do some on our own or with partners. We will see how that one goes. That's me. I think I gave a short introduction. Long time in hedge funds, and basically I believe in blockchain. I love blockchain. We're doing traditional assets currently as well as traditional assets on long short. Actually, we do four things: traditional assets, hedge fund assets, crypto funds, and now stable tokens. So, and I think this is basically the future and where the finance industry is going. We're just one of basically and you guys, many of you are bankers here, you probably think the same. And I think this is the end of my presentation, and I want to stop with a question, like I started the presentation with a question, and it is, what if the future of money is stablecoins, FX tokens? Thank you very much.
Well, first of all, I like the one phrase you mentioned, unbank the banked, which is, I hear this the first time.
I stole it.
Really?
Yes. It's a saying by Roger Ver, actually, and I think he's right.
Well, I like this very much, actually. But when it comes to your stablecoin, who is actually your main target group when it comes to buying the token? Is the one who would like to invest? And I've seen the chart, like 10 times, 50 times increase over the years. Or is it someone who would like to have a card and use his stablecoins for payments? Who is the target group for buying the token?
You made a good point, and this is where I need to work on the presentation a little bit. Thank you very much. The FXTO is the investor token, right? It's not the stablecoin. FXTO, it's the network token. This is for speculators, right? The stablecoins are ticker symbol 1 USD, 1 Euro, 1 JPY, and so on and so forth. And obviously, consumers of the stable coin, right? It could be, we heard Bitpesa today, right? We heard exchanges today. It could be, I think you in a project, in a bank project, basically, right? So it could be, this could be one, right? So everybody that feels crypto has one big challenge ahead, and that's custody, right? So everybody that feels safe with self-custody could actually be a consumer if he has the opinion, I want to stay in crypto, but I don't want to stay in volatile cryptos at the moment because it's a bad time or whatever the idea is. He could be a user, but also payments, right? Straightforward remittances, all of them, exchanges, and so on and so forth.
You are selling 60% of the token of FX token.
Yes.
10% to investors, 50% to the crowd.
Yes.
And 40% stays with the management team.
Yes.
Okay.
You like it?
Well, I'm not sure if 40% to the management team is a huge amount.
Can be. Can be.
It is.
It is. But the point is, it depends on delivery, right?
No, just if nobody has a question, I'd just be curious about any kind of project, because as you mentioned, we don't know where the future of banking gonna be. If it is still banking, what is decentralized? There are a lot of buzzwords out there. The easiest way of exchanging is I give you something, I give you a bottle of wine, you give me bread. And nobody actually knows. And maybe we sit together, eat and drink. However, there is no control of money, there is nothing. It's just you and me. And this is actually then taken on a digitization, where we actually are exchanging values as we would like to exchange.
I'm not sure if I lost you now with this real asset combined with the blockchain. Can you repeat it? What was your point, basically?
Well, I give you wine, you give me bread, or we can also change this one.
It's called a barter trade, right?
Yeah.
Yeah, but this is actually how the blockchain feels today, right? Because you exchange one token for another one, right?
Exactly.
Yes, and the price is some kind of, I'm not sure if it's a fair price, right? So actually the old barter trade, like you described, was way more efficient than this one, right? Now we added a couple of technology on that one. So I think you gave me just a hint. I think if you do that with a stable coin, it will work. This barter trading coins, right? For example, another use case, why do you need to raise, if you do an ICO, Ethereums, if you could do it with a stable coin?
Yeah.
Besides, you're a speculator, right? Right? Which they're all out now, by the way, right? Because they'll hope for, I think the last time they sold was 190 or so in Ethereum, and then they ran and said, okay, I'm out because I cannot take, they realized they have a business risk, right?
I have a final question because of the proof of asset protocol. Maybe you can a bit more elaborate technically and what is actually the result of proving asset, because it's always proof of asset protocol, it's sometimes misused. Yeah, some people don't have real technology behind it, so maybe you can actually elaborate what you are doing with proof of asset protocol.
Mm-hmm. Goes a little bit too far now for this presentation, but I try to give you a short one. The longest blockchain has the biggest trust, right? So it's Bitcoin currently, right? That's all about the blockchain. The longest has the biggest trust, right? So what it means to us is basically you need to print trust on the blockchain, right? So it means that the users of the stable coin basically have visibility of the assets, and they need to vote on that, confirming that the assets are there and confirming to the rest of the consumers that basically the pack is given, which currently doesn't exist for any other, as I'm aware of. Right?
I fully agree. It was a very good explanation. Thank you.